The other one is live. The other one's not live. What is this? Oh my gosh. This is a complicated thing. Okay, we're live. We're good. We're good. We're good. Okay, I'm here. I'm here. Sorry, guys. StreamYard was being so weird today. It just wasn't starting. I have another one going on live. I'm about to end that one right now because that one's fake. So here, we only have one left right now. Hello, everybody. How's everybody doing? Sorry for keeping you guys waiting. Everyone can hear me. Yes, you can hear me. Okay. Yeah, StreamYard was being really stupid today. Don't know what was going on. All right, the market. Let's open up Weeble. It is pretty rough in the market. I'm not going to lie. I woke up this morning. Dow was down more than 300 points pre-market. So pretty rough overall for what's going on in the market. A lot of stocks are down. I will warn you guys right now. I forgot the cowbell at my other studio. So I will not be able to do the cowbell. I know that's why you guys come. And I made a mistake. I left it there on Friday, and I was like, "Oh, I can't go back to get it now." So now the cowbell's done. But nonetheless, we still have to talk about what's going on in the market. So if we go to the S&P, we are down about 2%, about 1.9% in the market, pre-market. So we're at 417, ended at 422 on Friday. So the market is obviously down from where it was, which is, not the best. So we're there at 417. The Nasdaq we're about to show you right now is also down pretty heavily in the pre-market at 12K. Okay, so Nasdaq is ending here around 12,000 if I am correct about this. Yes, 12,000. Also down in the pre-market. Morning emitters. Thank you, David, for being here. So some of the rally that we've seen over the past couple of days, now it's being put into question. We've also had someone like Michael Burry sell out of his entire position. And as a result of Burry selling out of his entire position, it's led people to be a little bit more scared of the market. Now, is Burry always yelling about a crash? Yes, but this one kind of feels like we didn't have the full recession that we were theoretically supposed to have. So makes it a little bit more scary. Then you've got meme stock mania, proving that there is a little bit too much liquidity in the market. Bed Bath & Beyond was at 27. Now it's at 11. Ryan Cohen, the the chairman of GameStop, sold out of his entire Bed Bath & Beyond position. And it's pretty scary to me when the chairman of a company that is essentially a meme stock is selling out of his position of another meme stock. I mean, it is the classic definition of it pumped and he dumped. And to think that wouldn't happen to GameStop is a little bit dangerous to me. So you've got a lot of stuff going on. We've got, ideas that raised $350 million in terms of Adam Newman's new WeWork company. And it's like there's a lot of liquidity in the market. That means he's bullish if he closed them. Well, yeah, I mean, Michael Burry's positions were short, but you've got to also remember what Michael Burry was saying about the market. I mean, his historical analysis, at least on Twitter, was that that in 2008 we had a 20% bear market rally, and then we had the actual bottom. So I don't know. I mean, I'm not sure exactly what's going to be the catalyst here, but at least today things are not going that well. Netflix is at 241. We also had Palantir, which let it be very clear, I'm going to start buying pretty heavily if it drops below 8. I mean, I'm going to be buying even in this range. I'm probably going to put in another $100 today. Very small order for me. But as it starts to go lower and lower and lower, I'm going to start buying and probably writing puts, as Gabe has mentioned, is the best strategy if you're long-term bullish on the stock. It's an actual bullish strategy, writing puts on a stock that you're long-term want to hold. So like Palantir to me at $7-8, I mean, that it's like to get to 20, that's a 300, that's a 3-bagger, right? Like it gets a little ridiculous at that point. I missed the last time it went down. So I'm going to try to be a little bit more active with my investing if it actually does come down. Sell puts. Yes, that is the other thing. I'm selling a Tesla puts today at 750 strike, getting paid $6,000, expire December. Yeah, that would be your premium. I would not bought Tesla in so long. How much is Tesla right now? By the way, we have 2 minutes till the market opens, everybody. 877 pre-market, so down 1.4%. Tesla's had a phenomenal rally over the past month, going as high as about 935. So Tesla is feeling a little bit. Coinbase is feeling it. It's down 4% pre-market at 71. DNA, Ginkgo Bioworks, Kathy Wood bought another 1 million shares of this thing, or like 800,000 shares, I think on Thursday or Friday last week, down 2.8% in the pre-market. So overall, I mean, look at it. It's just blood. It's just filled with red. like filled with red. You wake up this morning, you check your portfolio, no matter what you own, you are down anywhere from 2 to 5%. Snowflake 149 pre-market. They have earnings coming up, I think, in 2 days. They have guided down on those earnings, so we're going to see how Snowflake's able to perform over the long term. Neo down 1%, Netflix down. Wow, Netflix is down 4% pre-market as well. So we are going to see how this is going to happen. We crashing, boys. Yes, we are. We are crashing, ladies and gentlemen. This is a bit of a crash. All right, so we've got about 30 seconds till the market opens. We're going to see how this reacts. We're going to start going through some news, see what's going on in the world. I hope everyone had a good weekend. I hope everyone got to mentally recharge and relax. We are ending out August, going to be in September in about 9 days. It's going to be over. 9:30 a.m. I don't have my cowbell. I'm sorry. Tomorrow, I promise I will have it. But the market is open. So wake your ass up because it's time to see what's going on in the market. SoFi at 615. SoFi's rally from 4 to 8 was pretty decent, but it's back down to 614 or like 492 to 8. SoFi's down. AMC got to 26 at one point, right? Was that? Yeah, look at this. 25. I have to look at even closer. AMC was doing pretty decently on the 5-day. It was, yeah, here we go. 26. I was right. So August 16th, about 6 days ago, it was at $26. Now it's at $11. It's down 40%. So if you bought the AMC mania when it was, doing AMC, well, it's down. Just another 2022 day, guys. Yeah, 100%. Just another 2022 day. Jose Lopez. Yes, thank you. Good morning, Jose. Happy you are here. Let's see what else we've got going on. Bitcoin. Now, this is another big story. I forgot to talk about this in the pre-market. 21K. Bitcoin was almost at, well, it did pass 25K for a very brief moment. 2572, and now it's down more than 5%, down to 21,000. I mean, I think this was also a big catalyst as Bitcoin goes down, takes down a lot of the market as well. You would imagine if we have a rally of the S&P up to like 450 that Bitcoin's going to do well. But I don't know if Bitcoin's ready to go back to 30, 40, 50K. Like when the S&P was at 450, Bitcoin was at 40. So, I mean, you would imagine that both of those have to correlate to each other in some capacity. And we'll see if that happens. Occidental, Warren Buffett has filed filings with the SEC to buy up to 50% of Occidental. Obviously, the guy's very bullish on Oxy. I mean, this is one of those things where you're like, all right, if Warren Buffett wants 50% of the company, maybe I should start paying a little bit more attention to it. Why does he want 50% of the company? So it's important about that. Did you see the video Jeremy did about Palantir? Yes. Thank you to Jeremy for shouting me out on that video. That was awesome. So I appreciate Jeremy doing that. Jeremy said he wants to build Palantir to be a 10 to 20,000 share position in his portfolio. So I mean, it's pretty cool. We have a pretty big influential dude who wants to be part of the community. Very, very, I like that. Definitely not horrible. Dow drops 300 points to start the week. Just got the notification from CNBC. So we're going to see how that ultimately plays out. Rubicon had earnings come out today. They have results. I did not go through any of those results yet. So I'll have to go through those. Spotify at 108. I was actually listening to Spotify earnings over the weekend, and it was interesting to hear kind of some of the stuff they were talking about. But the stock right now is not being treated by the market in any substantial way. Teladoc at 32. Kathy Wood bought another, I think, 300,000 shares of this stock. Where's ARK right now? Let's go to ARK. And then we're going to hit CNBC and see what they're talking about. ARK is at 43. Okay, so ARK is right back down to some pretty bearish. I mean, I remember I sold at 48. So it's weird. ARK at 43 and the S&P at 417. I mean, ARK was in this range when the S&P was at 390. So this is I don't know, man. This is a little interesting to see where the S&P is, which is the broader market in comparison to ARK. Amazon down to 134. Google, Enphase 278. So Enphase is falling off from their 300 highs. Google at 115. And we're seeing that everything is red. Everything is red. Everything is red indeed. All right, let's go to CNBC. Let's see what the talking heads are talking about and see what they are saying and keep it going from there. All right, here we go. We are seeing a bear market cycle, not a correction. Very interesting. Let's play this one and see some thoughts. The bottom is already in. Gabe, I hope you're right. Gabe.
The action that we saw Katie, the action that we saw, which was a pretty solid July and beginning to August, did you ever question your thesis that it would be a kind of a false bear market rally that was doomed to take us to new lows eventually? Did you ever question that? And where do you stand right now?
I mean, listen, we're always questioning ourselves. I think that's just very natural. And yet the indicators didn't turn. So the indicators, because they're mathematical, they're price-based, they really don't lie, and we have to stay on the right side of them. Short term, we saw momentum, of course, behind that relief rally. It saw the NASDAQ 100 up 24% off the low, much higher than we would have expected. And now, of course, the 200-day moving averages are in play as potential resistance. So short-term momentum, just really as of Friday, started to fall off. And that's for the first time based on our gauges since late June. So it does mark a meaningful shift. And yet the relief rally, as big as it was, it never affected the longer term gauges in a positive way. So that to us meant that we needed to stick to our longer term bearish bias and just kind of hold off on recommending hedges until now that we have that loss of short-term momentum.
What's the most important index right now? You mentioned the NASDAQ. You've talked about the S&P a lot. The 24% move from the lows in the NASDAQ did surprise you. But and we did see some 50-day moving averages, some individual stocks. We saw a widening of the breadth and the participation. So all those things, at one point, it sounds like they had you saying, whoa, maybe this is a show me market that's showing me that it's headed higher. Correct?
Yeah.
But go ahead.
The reason we're skeptical about that is because we think this is a bear market cycle, not a correction. Corrections can end in that kind of V-bottom fashion, but bear markets really cannot. So we've always suspected that some kind of basing phase or bottoming process is needed, and that takes time. It would be unlike what we saw just at the June low. Indeed, there was that breadth for us that was very widely publicized. When something's as widely publicized as that, I kind of feel like it makes me doubt it. But we saw a lot of stocks get above their 50-day moving averages. That was certainly a breadth surge, and yet it's so quick to contract, and we just don't want to get ahead of ourselves and sense that that's something that has any sustainability. In fact, our breadth measures got quite overbought. Things like that percentage above their 50 days, but also the McClellan oscillator. There's a lot of measures out there that, to me, got to unsustainably high levels. And now we're relieving that condition.
You don't see a 50% retracement of the move from the lows and then another resumption of an uptrend. You think that the 3,600, let's move back to the S&P since I just have those numbers handy. The 3,600, what was that, a June 16th low or so? You think that that's going to be violated at this point? We just won't see some backing and filling. And if we did, I imagine you'd get some of the spikes in the VIX and some other sentiment indicators that might make for you a more lasting bottom. You think we're going back to 3,600 or below on the S&P?
I do. I think there's definitely risk of that, certainly with the downtrend still appearing to have its hold. We didn't see any major resistance levels broken on the upside, so that was one issue. But again,
okay, so a couple things there. Number one, as you see on the chart right here, it says S&P is down year to date 11.28%. So it's at 428 for 422, and the year to date, the high in January was 478. To be down only 11%, given the year that we've had, to me is already a little. It's just pure naivete logic is it doesn't seem like we're really in a bear market if we're down only 11%, which begs the question why this person thinks it's going to go down to even new lower lowers or at least test 360 again, is because we haven't tested resistance at a higher level. That would have to be at least when the 2-year and 10-year inverted on April 1st, which would be the 450. We haven't tested that yet. Maybe we do. And then that happens, maybe. So we have a rally up until 450, then it happens. Or it's just like it keeps going down. And I think this is incredibly interesting to think about, just given the way it's operating. But that's going to be a big moment for the entire market, given where the S&P goes.
That long-term momentum remains to the downside. We're looking at risk assets like Bitcoin as well as really upholding its long-term downtrend. So no signs of life there, in our opinion, long-term as of yet, despite the fact that we have our initial long-term oversold reading. It tends to see a series of retests. We saw that in 2008. And unfortunately, looking at the VIX or volatility index, you can go back and make a comparison to about May 2008 with the way it's traded up until just last week. So I don't take any solid.
That's what Burry was saying, right? May 2008, it came up and then it ultimately started falling down even further, right? And the bottom happened, I think, like January 2009, something like that, or late 2008. So I think that's what she's comparing it to.
In that we haven't seen a VIX spike. I think, unfortunately, that the market probably needs that at some stage. The 35 level is resistance for the VIX, and even between here and there, that could be pretty painful. And for the major indices, there's about 6 to 7% downside just to the 50-day moving averages. And you can imagine what that would do to market sentiment.
We're back.
Very interesting. Okay, we're going to watch a couple more videos, but first I want to get into this new article that just came out as well. I'm just looking at it here. AMC shares tank more than 30% as Regal cinema owners warn of potential bankruptcy. So that's why I was wondering, why is AMC down more than 30%? Like that 30% number didn't seem like a big deal to me because I was like, it's just AMC, like it's whatever. But then I was like, wait a second, 30% is pretty bad. Like people who bought at 26 or it's at 11, like it's not necessarily good. Look at this, 37% on Monday morning. Where's AMC right now? Hold on, let me check it real quick. AMC it's down 34%. It's $11. It was after at 26. So what is the reason for this? The drop comes as rival Cineworld said on Monday it's considering file. Okay, so a rival movie chain is considering bankruptcy, which signals that the other movie chain definitely is not going to be able to. So AMC reported more than $5 billion in long-term debt. That total climbs to more than $10 billion. Now they also just had a new preferred share dividend called APES, which is their way of kind of diluting but not diluting. Remember, with the APE seeing its first trade on AMC at sometime tomorrow morning, the value of your AMC mess will be the combination of your AMC shares and your new APE units. So where's the APE right now? APE is $8.59. It's up 17%. What is this? Does this even make any sense? AMC hit piece by short sellers. I mean, maybe, but when another company's going bankrupt, it's something to take probably seriously. Morning goal is the global economy concerns affecting the market. KP versus Gabe. I got dibs on ringside seats. Yeah, things are a little bit rough in the global markets. Let's go back to CNBC and let's see what they're talking about. Man, this is really interesting. And the China stuff, we haven't even got into all the crazy stuff that's going on with China. Oh, look, Joe Lonsdale, Palantir co-founder. He's up there. Let's see what he's talking about.
Later this week, central bankers will be gathering in Jackson Hole, where we're going to hear from Fed Chair Jay Powell on his economic outlook. Our next guest is warning that Washington's not serious enough about tackling inflation. Joining us right now is Joe Lonsdale. He is 8VC founding partner and a Palantir co-founder. Joe, it's great to see you this morning. You're worried that maybe the Fed doesn't have the credibility that they want at this point?
Well, good morning, Andrew. You know, I think the leaders in DC clearly don't have the credibility they want. You know, there's ways you can reduce inflation. You can raise rates faster. You could spend less. I think we have an Inflation Reduction Act, which spends more. It does a lot of things totally unrelated to inflation, and it does a lot of things to give money out that's going to increase inflation. But you know, as a technologist, the thing you can also do if you want to reduce inflation is you can allow the deflationary power of technology and competition to go into areas and to fix them. But that requires, you know, passing laws to go against cronies and to allow us to go into healthcare and into energy and to build stuff. And they're not doing that either.
So when you think about what Jay Powell has got to do, what do you want to see?
You know, I think you probably need to raise rates a little bit faster, unfortunately. To you know, if you're addressing
but is that 75 basis points? Is that 100 basis points? Is that telling the market we're going to go 75, 75, 70? I mean, what are we talking about?
Yeah, no, I think Jay may be on a good path right now. He's obviously was a little bit behind the curve. So I think the Fed itself is probably going to need to go a little bit further, a little bit longer. It started too late. I think that the bigger frustration for me recently is just, you know, if Congress is going to act, you can't just keep giving out more free money. That's how it got us here. You can't give out loans now that are not going to be repaid later. That's the definition of causing inflation. So I think Jay Powell was behind the curve. I think he's probably on the right path right now. I think the rest of the kind of guys in DC are not really doing their jobs.
When you think about the world of venture capital, we've talked about a lot of companies that were funded in the last couple of years, and people start to worry about the cost of capital going up, and some companies that don't really have the runway what happens to those companies? Are you thinking about that right now in terms of valuation?
Oh yeah, so we both invest and we build a lot. And I'll tell you what, as a builder of companies, it's been a very frustrating time in a lot of ways the last few years. You have an artificially high price of talent. You have artificially high, price to create things. And so what you're finally seeing right now is you're seeing that some of the kind of more ridiculous companies, a lot of things called themselves Web3, were never doing anything economic whatsoever. They made no sense at all. And they were raising ridiculous amounts of money at higher prices and paying millions of dollars for top talent. And a lot of those people are now being redirected back towards more useful companies that are actually getting things done that matter in the economy. And so we are seeing a positive shift. I think you need a bit of a stronger recession to wipe out some more of the nonsense, and that'd be a good thing for our space.
Okay, so what Joe Lonsdale just said is that we need to have a bigger bit of a recession because he thinks there's still too much liquidity. He thinks things are still too much artificial and prices are too artificial. And I mean, one of the things he said about Web3 and a lot of the tokenization and crypto stuff, he says is all just a bunch of nonsense. And he says there needs to be a bigger risk of what's going on in the economy or a bigger shockwave in the economy to sort of put an end to a lot of that stuff. Is that correct? I don't know. But one thing you can't argue with is there have been absolutely artificial, insane valuations and prices, at least in the private market, for some of the stuff that's going on, which is probably not the best. Gabe with the super chat, 1999. Thank you, Gabe. I appreciate it. Admit, keep up the great work. The market wish is just cooling off. 2022 will end well for the market. Palantir will do very well. Buy this dip. I must say that Gabe, even though he did not say it, this is not financial advice, Gabe. So when he says buy the dip, take it at your own caution. But according to Gabe, and he's a friend of the channel, his argument is pretty simple. His argument is that the S&P is going to continue to rise, and the market crash will happen in 2023. He does believe winter is coming. Winter is just not coming immediately, and it'll take some. Wow, S&P at 416. Wow, we are down on the S&P. So he believes it's going to take some time. Is the bottom already in on June 16th? Maybe. If it's not, then we're going back down there, and we're going to see how that happens. Tesla at 866. Yeah, things are getting worse right now today. Neo at $19. Where's Palantir? Where are we at on Palantir? Palantir. 837. Look at that. Wow. I mean, if it goes below 8, I'm actually loading up. I'm like legitimately. You at some point you have to realize that the entire market cap of they have 10% of their market cap in cash. I mean, at some levels it just gets stupid, right? And like you have to see what's going on. What's going on with the other tech names? What's about Net? Cloudflare 67 down 2%. Datadog 103 down another 2%. Where's Unity? Unity is at 46. Okay, so they're down another 2%. So everything's down and everything's down in the market. Down. Down. Look at all the upside gaps being created. That is also potentially correct. Glitch Life, happy you are here. I know DNA is struggling a little bit, but hope you're doing all right. Alibaba, where's Baba as well? $90. Baba's actually up today. All right, Baba's doing a little bit of the inverse. Chinese, I know every YouTuber and their mother has made a China as a collapsing video. I don't think China's actually going to collapse, but if it does collapse, I mean, that's a whole nother threat to the market that we have not really spoken about. I am not as educated as most people on China. I've been still trying to do a lot more reading. I know the kind of core argument is the real estate stuff sucks, but we are going to see how it plays out. Oh, I think we have some breaking news here. No, it's not breaking news. But HBO Max and Amazon are launching a new series in the same week. Okay, that's whatever. Here's what we need to look at. I want to look at some energy stuff. Russia is still not giving as much energy to Europe, and I want to hear a little bit more about how energy prices are going down. Prices of oil are still down below 90. Now they should get to like 60, 65 for it to get better, but still down pretty much. Oh, Glitch Life. Wow. She says, I'm fine, but they sold their entire portfolio Thursday as they did not think the run was unsustainable. I'm averaging back in every day. Okay. So you got out a little bit decently.
I'm going to start with you. What do you think? Is this coming to America, as they say?
Well, I mean, Europe is going to be ground zero for this energy crisis. I mean, obviously, They are the main importers of Russian gas. The Russians have made it very, very clear they're going to continue to cut off gas supplies into Europe. We're going to have a 3-day outage on Nord Stream 1 starting on August 29th. But we can expect the Russians just to keep the pain up in order to try to force the Europeans to change their calculations about sanctions, about supporting Ukraine. So yes, gas prices in the United States will also rise, but Europe is going to be really where the pain is going to exist with this war.
Okay, so Rebecca, in terms of your expectation, if we're looking at WTI, you can play WTI, you can play Brent. Price, call it, let's go out 2 months. Where do you think we are?
Yeah, so looking at WTI, I'd say 2 months we're probably closer to 105, but Brent at 110. And I think a lot of that just has to do with the fact that we have several catalysts coming. As Halima mentioned, Russia likely continues to apply pressure to Europe and pressures, European gas supply, which will provide a tailwind to crude oil as many industries try to switch over from gas to crude. We also have the SPR rolling off in November, which has been a huge buffer to crude supplies in the U.S., and that's going to have a massive impact. And then we have increasing sanctions coming from European nations on crude oil, on insurance. So all three of those things, I think, really contribute to crude grinding higher. The market right now is much more focused on what's happening with demand and what's happening in China, and I do think those are relevant. However, I think the supply side of the equation over the next couple of months is going to overwhelm that, and China's kind of dwindling or slower recovery is going to fall to the back seat.
Before I go back to Halima, Rebecca, if we're at 105 here in the U.S. come October, where do you think prices at the pump go?
Yeah, that's a good question. I think prices at the pump at 105 are closer to like 430 to 450. And that's a place where it is painful for the U.S. consumer for sure, but I don't think it creates demand destruction and changes behaviors. It's kind of right at that threshold. So I think we're going to get back up to that 435, 450 on a national average. And I think that is unfortunately going to last throughout the course of the winter.
All right, that's pretty interesting. I mean, we are going to see how this plays out. The gas and the energy crisis I've seen from a lot of different articles have been theorized that it's going to be rough in Europe primarily because of what Russia's doing. Now, what that does is that creates a lot of supply side constraints on the overall gas market, which means that crude, which is at 80, 90 right now, if that does hop up to 125, gas prices could get to that 430 average. Let me know in the chat if you're in the United States, have you seen gas prices go down? I've seen it come down pretty substantially in my area. Even to the 390s, which is pretty awesome, that just given where it was at 490. But if oil goes back up and Russia keeps playing these games, it's like, I don't know. It's going to be a rough ride. And we're going to be able to see how it ultimately plays out. There's going to be a good amount of resistance at the $10 mark on Palantir. Yeah, I agree. There has been a lot of resistance in that case. Let's go back into Webull. Let's see what we're at right now. Palantir, well, look at this, even worse, 824. Goodness gracious, I'm afraid to even look at my portfolio. Wow, it is down today. Down. This is rough. It's pretty bad. S&P at 415. We're down a whole nother point on the S&P. If S&P goes back down below 400 in the coming weeks, I mean, we would need to see some days of greenery or flatness to stop where the S&P is going right now. Bed Bath & Beyond, obviously a 1075, because why would Bed Bath & Beyond be more than that? 415 on the S&P. We're going to see how much lower it gets. Again, 316 or 360 was June. I personally wanted it to go below 360 in June. Just to get rip off the Band-Aid. I said that on many live streams in June. It's crazy that it's August now and that's not even June anymore. But I was like, let's just get to 330. Let's deal with it for a couple months. Let's stay there and then let's go back. Let's have the bottom. And the problem was the market was like, no, let's rally because inflation's going down and all this stuff. And then it just spiked back up to 430, which is great for traders if you got in and out of it. But I mean, for long-term investors, you kind of want just some clarity, and this is not providing any clarity. Obviously, if you're DCing, it doesn't matter, but nonetheless, it is what it is. But sell puts on Palantir instead of buying it outright amid. Yeah, no, I am planning to do that. Gabe has got that into me, so I am planning to do that. But it is pretty rough given where it is. Apple was at 174. It was $6 away from being a $3 trillion company. Apple is now 168. Now, Apple also has said that their iPhone 14 is coming out September 16th, so it's going to get them an extra week of sales in the fourth quarter of 2021. Why are they doing this? Probably because they want to give themselves more time and more ability to be able to show growth. If Apple cannot produce the level of sales they were producing or the level of revenue they were producing on this newest set of product lines, it's going to be a tough quarter for them. And it's going to be hard to imagine them being actually valued at a $3 trillion company. Apple is one of those stocks where I just do not feel comfortable at all at buying. I think they're valued very nicely. I mean, they have a great multiple on them and they're almost a $3 trillion company. It's like, you got to imagine, are they going to keep growing from that? And the pandemic was amazing for Apple because everyone had to buy all these devices and everyone was at home, everyone was using it, but that we're kind of out of that. You know, they got to get into their next product cycle. And until you see their next S curve, whether it's cars or it's services, I don't think we exactly know how that's going to be happening. So Apple is going to be interesting. Let's close it out with one last video for today. And then we'll keep going from there. We'll see what we've got. Price outlook, blah, blah, blah. Okay, I think we're going to see one more thing about the inevitable recession, which hopefully is not inevitable. Also, we have to learn about actually, let's hear about student loans because student loans are a big deal. This is going to affect SoFi and this is going to affect some other key areas of the market. We have to see what's going on here.
Now away from the education department, ending its more than 2-year pause on federal student loan repayments. Many borrowers are hoping the Biden administration will extend that August 31st deadline and offer more debt forgiveness. But a new CNBC poll finds many Americans believe that could have unintended consequences. Our senior personal finance correspondent, Sharon Epperson, has more. Hi, Sharon.
Hi, Joe. President Biden does have a tough decision to make on student loan forgiveness. You know, after battling higher prices already, a majority of Americans, 59%, are concerned loan forgiveness will make inflation worse. That's according to a new survey by CNBC and Momentive. That concern, though, may be overdone. Over half of adults polled, 53%, say if forgiveness put extra money in their monthly budget, they would pay off other loans. And 45% said they would save that money for retirement. But nearly 1/3 of all adults, 30%, say there should be no student loan forgiveness for anyone. If you dig deeper, there are some sharp divides among those who hold this view. While 39% of men say no loan should be forgiven, just 22% of women say that. Only 19% of young adults between 18 and 34 years old say no loan should be forgiven versus 39% of those over 65. Overall, 34% of adults say only those in need should have loans forgiven, and 32% want loan forgiveness for all who have student debt. The Biden administration has approved nearly $32 billion in student loan relief so far, and the Department of Education says it is working to improve existing programs to make it easier for borrowers who qualify to get their debt discharged. And Joe, Education Secretary Miguel Cardona yesterday on NBC talked about the fact that we will hear something about loan forgiveness expected this week. Back to you.
I know we did
All right, we're going to see what happens. For my student loans, I have about 10 grand in student loans. So one of the things Biden is considering is just wiping out 10 grand for everyone who makes less than 125 a year. If he does that, I'm not going to have student loans anymore. If he doesn't, then I'm going to have to pay it off. So, I mean, we're going to see what happens. There is a good argument that if you relieve people of some of their student loans, they have the ability to pay off other things and that money goes back to the economy. But then there's another argument that it's just going to create more inflation. So ultimately, we are going to have to see what happens. Amit, what's your Palantir average? Still at 1930, trying to get that to be a lot lower, which is why if this dip happens, then we're going to see how that happens overall. All right, everybody. Thank you guys for joining the live stream. Check out the app in the description. It's my new startup. Would really appreciate if everyone signs up, downloads for that. Let me know your thoughts. We are trying to essentially build a YouTube of audio. So pretty cool stuff. Late night stock toss will be back today at 10 o'clock. So please keep your eye on for that. 10 to 11, I'll be doing that. And we will keep going from there. Have a great day. We will have some more videos coming out a little bit later. Why don't they just do 0 interest for the student loans? Yeah, it's because they got to make money off them. That's mainly the reason. The whole point of giving people a loan is so you make money back on them a little bit later. But 0 interest could work. Thank you guys so much for joining. I appreciate everybody here. I will see you all later throughout the day in future videos. Have a great day, great start to the week, and see you guys later. Bye-bye.